Investors, we're only 14 days into the month of August, and I've already spent well over $8,000 as I took full advantage of the recent market sell-off. So today, I wanted to round up with you all to give you an update on my personal portfolio, sharing with you what I've been buying, dividends that I've already received, and an overall portfolio analysis. With that, are you ready? Now, whether you caught the win from just being an active investor monitoring the stock market, or you're keeping up with the media, or perhaps you're even following some big fish on YouTube, I would imagine that the vast majority of investors out there simply backed down or cowered back from investing this past week out of sheer fear. And if you listen to all of the noise, I'm sorry, because you just lost out on a lot of opportunities. Opportunities galore as a long-term investor. Now, many hardworking, honest investors out there get duped because of all the fear-mongering. And personally, it drives me up a wall to see fellow YouTubers take advantage of the situation with their clickbait titles and thumbnails depicting that the world is coming to an end. While I know full well that most of them are actually buying Nancy Pelosi style as they're duping you. Anyway, that's a whole different story altogether. As for me, I personally spent over $8,000 and wanted to take some time to share what exactly I bought on top of what exactly is happening with my portfolio with an analysis. So let's get to it here. Popping open Gitcoin, we can see that my aggregated portfolio value comes in at $177,205.80. And as we look into my portfolio's overall performance this past week, well, just like everybody else, I was in the red. I slid by about 5% back on Monday before beginning to bounce back by the end of the week. And coming over to the allocation tab, we can see here that I'm still stock heavy with over 54% of my portfolio directly invested into individual stock positions before tapping into ETFs, which now have taken over roughly 27% of my portfolio, mutual funds at 15.8%, and after this week, just under $5,000 worth of cash, equating to 2.77% of my portfolio. But I'm going to be replenishing that position this week. Now, position-wise, given I initially built my investment foundation with Vanguard's total stock market index fund, ticker symbol VTSAX, it remains the largest position within my portfolio, followed by Apple coming in at 14.2% of my portfolio, which is sandwiched in there by another Vanguard total stock index, ticker symbol VTI, at 12.8% of my portfolio. And here's where we get a major development, as Alphabet has officially become one of the largest holdings within my portfolio, coming in at 10.84% worth of my portfolio's weight. Now, I'm going to cover that in more detail shortly, but then we're going to get into the Vanguard Tech ETF, some dividend gold with Johnson & Johnson making up 9.2% of my portfolio. Another position that I'm hyper focused on rather recently has been VU, which covers the entire S&P, before positions like Realty Income, Lockheed Martin, and Visa, and then I'm spreading thinner and thinner into smaller positions. Now, have a look here, because I actually want you to note that I am tech heavy overall, with just over 50% worth of my portfolio invested into tech. And given my age, investment timeline, and risk tolerance, I can afford to be. But I also want you to note that I personally feel that we are only getting started when it comes to our tech-oriented future. Now, my portfolio following tech taps into a lot of safety with healthcare at 13.97% of the weight, consumer discretionary at 11.44%, and industrials at 6.77%, before I spread thinner into financials, real estate, and the alike. If we scroll down here, Gitcoin actually has a very unique scoring feature that gives you an AI analysis of your portfolio. So clicking more here, you're going to see that I get a score of an 85 out of 100 with our metrics down here at the bottom of the screen, whereas I score a 10 out of 10 out of overall diversification, though a 9 out of 10 for risk, as well as a 9 for fees, meaning I pay very little in fees altogether. And my lowest scoring metric here comes down to macros, meaning most of my positions would be down at a time like right now, which makes a lot of sense given I'm tech heavy. Again, 50% worth of my portfolio. But now, as a long-term investor, I'm not worried in the slightest for any of these macro conditions that present themselves to us today. And before I cover what I bought, I quickly want to share that I received a dividend from Darden Restaurants, ticker symbol DRI, which is a restaurant operator of multiple popular restaurant brands within the United States. Whether it's the Olive Garden, Longhorn Steakhouse, Eddie V's, or the Capitol Grill, I am sure you know their restaurants. But I bought Darden initially back in 2020, and it has fared me very well ever since. So I went ahead to buy more shares not too long ago to double up on the position, and right now it's trading at a nice discount, down by almost 10% on the year, trading for $144 per share from over $170 per share back in March, with a PE ratio at 16.6, which is all likely tied to consumer trend shifts and price pricing pressures. But zoom out with me to see Darden's real power with over 362% worth of appreciation over the last decade. And analysts right now are calling for a rebound, with that share price hitting $169.32 per share, which would be 17% worth of upside from here. And until then, it's all about the dividend, to which I received $19.02 thanks to my 13 shares, and a dividend coming in at 3.88%, which is packed with explosive growth, talking about 23% worth of a growth rate there with Darden. However, I'm most excited to share with all of you all of my buys from this past week, starting with the smallest purchase on the week, which was Amazon, ticker symbol AMZN, which I know what the vast majority of you are probably thinking, because I'm a dividend investor. Well, what the heck is this guy doing then buying a non-dividend paying stock? The reality is, I think it's always worth it to marry dividend stocks to growth stocks, especially if you're a younger investor or have a longer term timeline in the market. But after Amazon came out with lackluster earnings, thanks to fearful consumers cutting back on their spending, on top of just a major sell-off, it was hard not to snatch up more shares worth of Amazon, as it remains down right now in the red, trading for $165 per share. But zoom out with me, we're going to see over 916% worth of growth, which I think is going to continue well into the future. And likewise with analysts who are forecasting a strong bounce back, $224.97 per share, equating to 35% worth of upside from here. Now, I ultimately bought $824.15 worth of Amazon this past week, bringing my share count up to 20 total shares. But that was actually just the beginning of my buying spree. I loaded up on shares worth of Alphabet, ticker symbol GOOGL as well, all thanks to antitrust fears and concerns that fused with emotional tremors from the sell-off. Well, Google just fell to a low of around $155 per share and still trades now at just $162 per share, with the PE coming in lower for Google at 22.8. But zoom out with me to see over 455% worth of appreciation over the last decade. And if you think about it, we are, well, today in a place where Google is just a phenomenal bet, as it's the largest search engine in the world, also owning YouTube, which is the second largest search engine in the world. And most importantly here, when thinking well into the future, AI. Now add the AI mix into this bag, and I think over the years we have a power player on our hands for decades to come. When rate cuts finally hit, we can also expect companies are going to feed this advertising beast, once again driving up their revenue. As for analysts, they're forecasting over 26% worth of upside from here. That would hit a share price of $205.71 per share. All while smart money has in fact been pouring millions of dollars into Google. We can see over 6.2 million shares purchased last quarter. Now, after this past week, I spent over $2,000 on Google, $2,079.81 to be exact. Now I am 4 shares away from my goal of 100 total shares worth of Google, and given Google is now a dividend stock, it drives my excitement even further with a 0.49% dividend yield. Now, as many of you know, I took my portfolio in a drastically different direction following a huge mistake that I made in 2020, which was loading up on far too many positions and spreading myself way too thin. So I no longer just buy anything and everything when it comes to individual stocks, but I do still permit ETFs into my portfolio when stocks in focus for me aren't exactly trading at prices that I like. And this past week, there was many discounts that were out there, which led me to actually just scale 2 ETF positions of mine that I am most confident in. The first was Vanguard's Information Technology Fund, ticker symbol VGT, which you could see was at a low point this past Monday and remains off its peak on the year, $532 per share, yet still up there on the year by about 10%. But zoom out here to see over 500% worth of appreciation over the past decade. Now, because I don't analyze a lot of tech stocks, but I know this is where a lot of opportunities lie, for me, this ETF is a lifesaver. And a matter of fact, performance-wise, investing $10,000 into this fund 10 years ago would have resulted in a return of over $49,000. That's roughly 19.4% worth of an annual return rate. So I went ahead to score $2,621.14 worth of VGT, bring my share count up to 34 shares. And finally, just remaining consistent with my strategy of dollar cost averaging into an S&P 500 fund, this past week was no exception. I went ahead to double up on this dollar cost averaging strategy, buying more shares worth of Vanguard's S&P 500 ETF, ticker symbol VOO, which is honestly one of the safest bets that you can make as an investor, and it's also just insanely lucrative over time. Now, this past week, well, it was certainly in the red, though remaining up on the year despite all the uncertainty, yet zoom out with me to see how reliable VOO really is. Over 227% 100% worth of appreciation over the last decade. So I went ahead this past week to score almost $3,000 worth of VU, totaling $2,916.72. Bring my total spend on the week to a staggering $8,441.82, all while most investors actually back down from buying a lot of these opportunities. Now, if you were also on a buying spree this past week, you gotta let me know down in the comments. Most importantly, detail out what you loaded up on, or if you actually strayed away from investing, tell me why. Moreover, discover insights right here just after this video, but before you click away, be sure you're subscribed to the channel to never miss a single video.